My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, welcome back. Today a special treat. We've got a very accomplished young man on the other end of Zoom with us. Igor Shaltanov is a former professional athlete turned entrepreneur turned fund manager. So that's what we're going to be talking about here today. Zooming in from Los Angeles, California. Igor, welcome to the show. Great to have you.
Thank you, Dave. It's always a pleasure, right, to be on the show and then to share as much as possible to people, though.
Fantastic. Igor, tell us a little bit about what you're up to today as of 2025. Tell me a little bit about your fund. What's it all about? What do you guys invest in? What do you focus on? What is your role in this fund?
Good question. Thank you, Dave. Yes, I would say, like, again, we focus on multifamily. We focus on real estate, right, for the most part. And 2021, 2022, I would say 23, maybe not 21 as much, right? When we start to experience that hike of the interest rates. Mm-hmm. So we were really cautious about where we want to invest and then what we want to do with our fund. And with an idea, we want to protect our investors first, right? The ultimate goal is not to lose money. Like whatever happens after, nobody cares, right? But if you don't lose the money, so you're going to be on top of the mountain all the time. And with that being said, we said, okay, where we can participate when we do not actually experience that interest rate hike and we do not actually experience that future, right? We don't bet on the future and say, oh, it's going to go down, it's going to go up. So, and we start to actually look for opportunities when it's a debt structure. So let's participate in real estate, but on a different version of it. So we're going to be actually giving out people who is doing commercial real estate loans.
Okay.
Yeah. So
what kind of loans are you making for commercial real estate?
Yeah, that's
primary, secondary, bridge loans. What does that look like?
It depends. And then some of them like a primary, which is first position, right? And some of them, I mean, probably would say majority of them will be second position, right? And it's in the form of pref equity. And the reason why, again, because there's a lot of deals which just cannot go traditional way, and then they cannot go to conventional bank and refi. So they cannot go out to conventional bank and say, you know what, we want to purchase that very lucrative real estate, I would say business, right? But then none of them will be like financing us. Why? Because there's certain terms they cannot fund under, right? And we saw the opportunity. We just connected with Aspen Funds, and then we started to develop that debt fund. And then that was probably the good portion of 2023, right? 2024, I would say. We just focus on that, and we've been raising capital for that and actually placing a lot of capital into the deals, commercial real estate through the debt fund.
Very interesting. So commercial residential, still apartment buildings is what you're focusing on.
Commercial residential, yes, if you put it this way, yeah.
Got it. Okay. Interesting stuff. And what this is, the fund's been going for a few years now, more or less. What kind of capital do you have in the funds? What kind of deals are you funding? What's going on? What's going on with the fund at this point?
Yes, it's been for 1 year, not a few years, but
okay.
Then, yeah, because we were thinking about that first and then structuring that because it takes time to prepare.
For sure. Yeah.
So, and it was the good portion of 23, I would say second half of the year. And before that, I'll jump out a little bit. So we just did the actual land play, was a land entitlement deal. It was 200 units, which is not units, it's just 200. It's a big piece of land, which is spaced out by 200 lots.
Yeah.
So, and essentially there's no financing there. There's no bank finance. There's no, leverage, right? It's been like all cash. So, and we say, yeah, let's do that because we kind of protect ourselves if something happens, if it's going to be keep going and going, right, the rate. So we're not participating in that. So, and then we moved to the debt fund. So with the debt fund, we were focused first on the structure and what we're going to do, right, the paperwork. And so we did that. And then we just we raised about, I would probably say just to be safe, maybe $18 million for now. I need to get the last update. It was a 16, but it's been a while. It's probably 3 months ago. And yeah, I think there's a six deals. And you mentioned there's a multifamily units. There's I think three of them, it's actually warehouses. And,
Okay.
and like I said, it's different scenarios, right? Where the people want to add value. Maybe they want to do some, I would say, remodeling, right? Maybe they want to put like a high level tenant and they need some adjustments and they need some improvements, right, for tenant and stuff like that. And they need the capital to do that because, if the warehouse is empty, there's almost no value of that building,
Yeah.
right? But
Right.
once it's 10-year lease on it, 15, 20-year lease on it, okay, now you're talking about like a big, big profit, right? If you sell that building. So we'll get a couple of those inside. Like I said, there's about six deals right now. So they it paid out about 10%. I would keep it conservative. It's actually 11 with something. So it's about 10%, right? It's a monthly distributions. People really like it. They get a couple options. They can actually keep the cash flow. Like they can withdraw, let's say, right, distributions monthly. Or they can say, you know what, we want to keep it, right? And you guys keep it inside of the fund
Let it compound.
and
Yeah.
we'll compound and get like effectively we'll get a little better rate right at the end of the year as well.
Interesting. Really, that's pretty smart. So let's back up a step or two, Igor. How did you go from being a professional athlete, and if I recall correctly, water polo
Yep.
was your sport? Then you became an entrepreneur. I think you had a sports school for a number of years in Los
Yep.
Angeles. How did you go from that into the high finance world of funds and fund management? Must be an interesting story.
It was scary and fearful, but
Of course. Yeah.
it takes a little bit of time. But
Yeah.
I would probably start was a backup, right? Just imagine I'm in Russia, 1994, right? There's no internet, there's nothing like that, and I hear one of my friends saying, you know what, you can actually get the cash from people by giving up your place. Like they can let them live in your place and then they can give you cash. I was like, wow, what does that mean? I was like, there's no idea. I don't know what's investing. I don't know. I'm about 14 years old. I don't know what's the real estate. There's nothing on internet. There's no Google search. Like
Yeah.
that was like first time ever I heard of exchange of money for place. I was like, wow, it's interesting, but I never did anything with that until then. My mom had a spare apartment. And I was like, oh, I remember the idea of the guy was like picking up the cash. And remember, there's no leverage. It's all cash you own free and
Right.
clear. And then whatever you take home, right? It's like no taxes,
No
nothing.
taxes back then. Yeah, it was a Wild West.
It's like a
Yeah.
wild world, right? The Wild West, like you said. So it's all cash. And and the first thing happened to me, so I said, and I'm making money. I'm playing like Russian national team, playing like a club level as well, sports, earning more than I need to spend, right, on monthly basis. My first thinking is if I don't put it away, I'm gonna spend it. Like I'm gonna go like girls, nightclubs, cars, you name it, right? So
Yeah.
casino, right? Like all the fun stuff in the world. And in my case, again, I'm saying this one more time. In my case, illiquid investment was the way to go because it takes a lot of effort to sell it, a lot of time to do that. By the time you do it, you're like, no, I'll keep it. All right. And then illiquidity was the game for me. It's
Hmm.
illiquid. It's locked for 5 years. You cannot touch it. It's growing. You're not actually thinking because I was always thinking through. I learned it later after. So there's tendency of your brain, right? If you even so you have it on separate savings account, it's not visible. You're still thinking on the back of your mind, I can afford for yourself this because I have that.
Got it.
All
Yeah.
right. I can afford
So
this.
you wanted to have it locked away, out of reach. You could not touch it, but you own something.
But it's working, yeah.
Yeah.
But
Yeah. Yeah.
meanwhile, it's not just sitting there. It's like you lock it in a bank account, right? Or you lock it in like a safe deposit rate or something like it's like
Certificate of
working
deposit. Yeah.
hard for you, right?
Yeah.
So, and I found it in the form of real estate. I was like, wow. So I really love it. Why? Because my brain is not constantly thinking about this thing because it's working by kind of itself,
Yeah.
sort of, right? And that was my first idea. And then I said, okay, I want to participate in that business because it's like perfectly fits my, psychology. It fits my business plan. It fits my timeline as well. 5 years, it's perfect for me. So, and that's how I started. So, and then I start to accumulate those units when I sell it. Sorry. And then when accumulate. I rent it to the people. I probably keep it like 3, 4, 5 years.
Was this back in Russia still?
Yes, it was.
Okay,
It was.
nice,
I would
nice. Yeah,
still live there. It's back in Russia, right? And then my first, because it took me about 6 months to actually convince my family to move from one place to another so I can remodel that other place, right? And then
yeah.
give it to people, right, for rent. And my mom was always against that for a long time. That's remember you asked me how you turned like for 5 years maybe in a row. I'm buying one new unit and she was like, "Don't do it. That's like a mistake. You don't do that. Keep the money. Buy something else." I was like, "No, we're doing really good." And she's like, "You can't believe me." Until one day she's like, "Okay." She see the rent coming in, and then the guy's like bringing the pile of cash because again, it's a cash, no check, no bank, right?
In Russia, yeah,
Yeah,
exactly.
it's a
Back in
cash.
those
It's a pile
days.
of cash,
Yeah,
and the mind was struck. I see her mind like killed. I was like, why? Because and the reason why, because her salary was equal to that monthly
wow.
payment, and then she was like, wow. Like I'm working Monday through Friday, right? 9 to 5, 6, whatever you name it. And you just getting this was like almost nothing, doing that. You know what I mean? I mean, it's a lot.
It opened her eye to quote unquote passive income.
Yes, and then now you start to realize it's actually not fully passive, of
Of
course, but
course,
it's actually
yeah.
passive, and it was more passive in Russia. And the
Compared to
reason,
what she was doing to make the same amount of money, a
yeah,
lot more passive. Yeah,
yes, and then the good story is as well. I didn't know better, but then there was two guys living in my first ever place. Two guys living, and they were lawyers, splitting that payment, which was super affordable for them if you count the
yeah,
salary, right? And I can analyze that later, right now. But then back then I didn't know better, so it's two people. I was like, I was worried about they're gonna trust the kitchen. They're gonna do
yeah,
this and that. But like, who cares, right? They don't eat. They go out and eat outside, right, of the
yeah, yeah,
apartment, so they don't cook as much, right? They keep it clean. I mean, so we learned so much through that first project. So, and then that was the game changer for my parents as well. So they start to see the value. They start to
nice.
see the actual, they still will blame me every single time, but it took me persistent resistance. I don't know, like perseverance, like we buying this thing, we buying another thing. So we buying next unit, we buying 4 units. And
So
then,
you took your family along with you, kicking and
yeah.
screaming initially, but
Oh
finally
my
got them on
God.
board. Yeah,
I'm telling you, that was and then when the thing was, my sister was working at the regular job.
yeah.
And there's a couple of things I'm proud of. First of all, I have 3 kids. She had 1 kid, and then she's like, see me coming to Russia from United States. She's like, oh, you got 3 kids, and she got another kid, which is my probably the biggest accomplishment of her being around her and then being around my family. But then the second biggest accomplishment was she was like looking at my business model and she all of a sudden she got 3 apartments in the same
Wow.
day. She went to the bank, another bank, and she bought 3 apartments in one day because they approved her for the credit. So, anyways, and then there was another, like all the families started to really see into that real estate investing all of a sudden. And they were like, oh, it makes sense. Oh, I see what you're doing. And then, so once we sold one apartment, because my mom was complaining like every single year to me, every single day, like, you don't do it, it's wrong. And I was still doing this,
Yeah, yeah.
it's wrong. We're not supposed to do that. It's bad and blah blah. I don't know. She would find like millions of different things. Don't buy it, blah blah. And once first time when we sold the apartment, we got like I don't know 20 million rubles right on account. And she was like looking at it. She was like, "Oh my God." And that was another. I think it took her 5 years to really understand. Once we sold the first one, she was like,
Yeah,
"Oh my goodness, this is like I never seen that money in my lifetime." You know what I mean?
yeah.
And I told her, I said, yeah, but it's been only 5 years since you accumulate the whole thing.
So real estate's been in your blood for a long time then, Igor. It wasn't a new thing. This was something that you've been doing for a long time.
I would say subconsciously, or like I was not conscious doing that because
Yeah.
I was thinking through like a saving money, not actually the business model.
So when you came to the States, did you continue buying properties in the States at that time, or did you save up your money and buy a bunch more stuff a lot cheaper, I would assume, back in Russia?
Yeah, good question. So the first stage was we opened the business, like we landed in 2009, November.
The
Without
whole
it,
family or just yourself?
a whole family. It's my
Oh,
wife,
okay.
my
Okay.
wife, and I had 1 kid back then. He was born here, but I was
But
still
but not
working.
your parents, like your parents
Not
and
not my
sister.
parents. My parents
Got it.
still live there, so they never
Got it.
came,
Yeah.
and they don't want to come. So the thing is, like, I had delivery of the baby, but I was still working at the assistant judge at the courts because I had the GED I had a lawyer like a degree, and then
Hmm.
I was trying to work at the court system. So just to, get the experience and then work myself up right into I would say the law world, right?
Hmm.
And absolutely hate it, right? It just, didn't connect to my internal being, right? And
Yeah.
then when we made it here, but my first education was PE teacher and coach, and I loved it every single day. I didn't care about the compensation. I was like, you know what? I love that idea of spending time with kids and then training them and blah blah. When we landed 2009, we had the ticket back. So we said, listen, so we're gonna, spend some time. We just built a house in Russia. The life is good. So all the cars paid, the house is good. I lost my job. I just quit my job, not lost my job. So I was like, let's start new. We got a
Yep.
couple ideas for businesses. And then we have a family dinner, and then we have a assistant who's saying, you know what? Or like a helper or somebody. Why are you guys coming back to Russia? And we were like looking at my wife, looking at each other. So like we didn't know. Like the only reason, like because we have like apartment, cars, house, and that's it. Nothing else.
Mhm.
There's no opportunity, no job, no work, like no business, nothing. And we said, okay, so but like where do you want to start your life? Right? If you just erase all of the assets, like where did you want to start your life? And like here, like there's no question. We want the kids to go to the best schools, education, right? The
Mhm.
access to different opportunities. Anyways, what I'm saying here, we start the business. So in 2009, I would say December, we say, oh, we're staying. We got a green card 2010, maybe about March or so. In April, we start the business, and it was a basketball academy for kids. So and
Nice.
when we sitting there on a table and we're saying, what are you going to do? Like we said, let's open basketball academy. And the reason why, because my sister, I mean, sorry, my wife brother, he was drafted by NBA team, so by Clippers, right? And that's how the
Nice.
full family moved to United States. So we have like destiny and heritage and history, right, of basketball in the blood. So my wife played professional basketball as well. So when we were judging between water polo school and then basketball school, we said the basketball is a lot bigger business, so let's
Yeah.
do that. Let's move that. That was a great wise decision. So and then we opened that, and it took us about like 3 to 4 years, like do nothing but just working and
Yeah.
grind every single day, just building that business. So in about 4 years, we grew to like probably four different locations. It
Nice.
was about like 300, maybe 400 students by that time. And it started to become a business. It's not like a startup anymore. It's not. And then
Mhm.
the cash flow started to come in. And then so from my Russian investments in this, and I said, okay, I said, I need to do something here. So let's transition again. So it was like a cycle of business development. Once it stopped, and then I start to delegate, we hire people. So I say, okay, I got to remove myself from operations and let's do real estate again.
Oh, interesting.
Yeah.
And
And
is that when so did you start as an investor or did you get right into a fund?
no, I just started my first thing was, okay, I said, let's replicate the model, which is
Hmm.
already proven to me here. All right. And then, but not in apartments, but in the single family houses. And again, if you talk to investors, right, who went to the bigger multifamily, so usually they start with single family.
Yeah, yeah.
Usually they play a little bit up until like 5, 10 units. And then, anyways, so my experience was when I bought the first house, I remodeled it. I was thinking through the add-in value, right? So it was a little bit beat up. So we did remodeling and stuff.
Hmm.
And the first thing happened, so I leveraged that. I didn't use leverage before, so we start to leverage. We use a bank, and that means you got a payment monthly, right? That was the first thing. The second thing was once it took about 6 months to remodel the whole thing, so it took about like 3 months to find good tenants. So it's the 9 month thing, paying every single month like 3,000.
Yeah.
It was 3,000 back then, so I probably spent about 70K, right, to remodel the whole thing. It was 450 a total price, 70K to remodel, down payment, right? And then paying that monthly was painful. Not to say not once we got the test in place, I don't know, it was like cash flow, $300 maybe, if so. And
Yeah.
I was like, okay, something is wrong. That was the thing. But there was the first thing. But then the second thing, when they left again, it took me another 3 months. I was like, oh my God. So all of my cash flow just gone. I was like, okay, let me look at the business model. I started to be a little bit more sophisticated. I joined like a bigger pockets back then. It was like 2000, maybe 15 or so. And then I started to become like more of, okay, what's the ROI? What's the IRR? Like, what's the percentages? What is the leverage? I mean, cash on cash. There's all of those things in my mind, right? And I start to calculate, put it on the spreadsheets. Because before, again, I was like, okay, let's save money. So, and it worked
Yeah.
really well. Now I was like, okay, let's actually make it as a business model. Let's see what's actually every dollar bringing you right to the table. And the reason I got lucky was that house because it was appreciation play. So it's
Mhm.
California, it's appreciate like crazy. And couple things was different between my portfolio back there and then here. So the maintenance, the amount of maintenance it takes to run single family house, I was like, oh my God. The demand of the tenant inside of the California single family house is insane.
Yeah.
So there's nothing. And then I found out there's nothing in comparison in the world than just a tenant in California in single family house. Right. So
I'm hearing they're a colossal pain in the butt. That's what I'm hearing.
that's what I'm saying. So, and then I
Yeah.
was like, do you want to, and the next question is 10x always. Do you want to 10x that multiple, like, responsibility of the property manager? I was like, no
Mhm.
way, I'm not doing this. And then my idea of like investing in single family like died right after. I said, okay, I'm selling the whole thing. I'm going to the next chapter. But then what's the next chapter?
Multifamily. Yeah. So let's, as we're wrapping up here, Igor,
Yep.
time really flies. We're having a great conversation. I'm fascinated by the fact that you've started your fund relatively recently
Yep.
and you got $18 million in there. So you've become very good at raising capital. What have you found to be most effective for you for bringing on investors for your fund?
What's been most effective? I think sharing your story.
Hmm.
And I would say the first investors are the people who actually see in your success. So, and I'm not talking about like a flashy, like a cars or anything like that. I'm talking about success. You opened the business, so you just became number one company in LA, right, for basketball education. So you opened another business, so you became like one of the best funds to invest in. So when they see your success, step one, step two, step three, like I'm seeing like people who got 10 years in the United States, they have no green cards still. They
Yeah.
still have no green card. So, and again, this is the first step of your life when you get a green card. It's like we got it in like in 3 months right away. Why? Because that's intention, right? That's whatever you want to do in your life. Go take an action, 100% of the action. So when people actually see your story of success and it repeats over and over again, they say, we want to join you. Why? Because you did this in the past. Like multiple times, you did this, that, this, and I had multiple businesses and some partners as well. So when they see that and you share that story and they feel the passion, they like, we join it, whatever, yeah, tell us where to go, right? And I
Yes.
think that's been very successful though.
And what do you do to find, because 18 million is a lot, so is that all from people that you already knew you, or have you found a way to tap into new investors as well who don't know you that well?
That's a good question. I think there is a split though. I think the beginning was all the people again, like who
Yeah.
trust you, who knows you,
Yeah,
right?
yeah.
That's
No,
the
like and
beginning. And
trust for
then
sure.
yeah, and then the second stage is like when you go out and what we're doing right now, we're talking on a podcast, right? And we share some ideas and some experiences. And I think that's the next stage, right? When you start to go out, and I feel like social media outlets is pretty big. So we have our own podcast, which is Pro Investing. So I just love sports. I love sports, I don't know why. So I'm still coaching the middle school team. I go to I have three kids. They just play in the basketball season, every single game there. So I'm going to
You're
my,
busy. You're a
yeah,
busy guy. Yeah.
like by just going through the people, sharing what you do, and then they go follow you on social media, they just reach out to you. They reach out back to you. Oh, what do you do? So that's interesting. Yeah, tell me more. So I think the social outlets is very important as well.
Igor, if people would like to connect with you, what should they do?
So they can go to Win Real Estate Game again because it's of sports, winrealestategame.com. So they can download the ebook about the multifamily investing and syndications, or they go to our website, avistafund.com, or they can shoot me email, Igor at avistafund.com. We'll be glad to connect.
Fantastic. Thanks for being on the show. It's been a lot of fun.
Thank you, Dave.
All right, everybody, take care. We'll see you on the next episode. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.